So we're recording again. Good evening again. September 1st, 2022. Welcome to SPX Master webinar. How to chart and trade supply and demand zones. Thank you for attending tonight. And let's jump right to it and start looking for charting. Okay, guys. So this is a very, as always saying, this is a very important topic because it helps you allow to not to short in the hole and don't not to go long when the underline is about to find some resistance. So there's many ways to draw. I mean, the foundation is the same, but there are many ways and many forms that traders or technicians chart the supply and demand areas in order to what I refer to this is what candles they take in consideration and what is the range, because at the opposite to support and resistance levels is a very defined point where we have peaks and valleys, and supply and demand are zones, they are named, right? So it's a range where the price is gonna fluctuate in that range, but somehow it's gonna find a support or a resistance or in this case a supply. That supply is sellers and a demand, and we understand demand with buyers, right? So when we get to a demand zone, we're getting a kind of a support area. When we are approaching to a supply zone, we are approaching to a resistance area or a seller's area. So I'm gonna give you the fundamentals of how to draw it, and the way that I do it is usually you can do this on after hours or your weekends when you're charting. That is always important to chart your main. I mean, obviously S&P futures or SPYs, Qs, and the bigger. I mean, the most common underlines or stocks, right? Apple, Amazon, Google, Meta, etc. But also it's good to take a time if you have a watch list in the morning or when you're prepared or trying to find some overnight, trying to look for opportunities, to have them already drawn ahead, because you can and have it on a different drawing, right? So for example, what I suggest is something like this. You don't want to put any indicators, any volume bars, nothing. It's just a clean chart, and the two time frames that, since we're gonna be so we are intraday traders, of course you can do this in any time frame as well. People who trade forex use a lot the support and resistance and in the 1 3 minute, but it's not our case. So we know that we use a lot our 10 minutes, but the best time frames for intraday trading for supply and demand zone is the 1 hour and the 15 minutes. So the idea is that what you do is you draw your main support and supply areas, I mean supply and demand areas on the 1 hour, and then when you're trading you switch to the 15 minutes, and you can also draw some supply and demand areas intraday in order for you to manage your trade or when you want to get into a trade. So you can have a very focus zones intraday or not even intraday. I mean, for the next 30-40 minutes that you can also define, and you'll see how I'm going to do. But the technique is the same. The only thing that changes is the time frame and how and how close or wide you want to see it in time, right? So as I say, so you need a clean chart like this one, and we're gonna start doing some. I'm gonna start explaining you some fundamentals of how to draw. So usually what I do is I start with the 1 hour, and in this case we have a SPY here, and what we're gonna look is areas where we have significant movement on the other line. Not exactly peaks and valleys like support and resistance, but where the underline, just to see it very quick on your first sight, you see a change in direction or a very strong move. So let's, for example, in case of example, I'm gonna zoom in a little bit this one, and we can see here our first example, right? You very quickly can see here a big move to the downside, and so that is what is telling you here, that you have here a supply area, right? Because it's going down. So the way that you draw it is, once you find that spot, in this case it's a supply area, and if it's a supply area is because the movement was to the downside, and you're gonna draw it in red in order to differentiate if it's a supply, because a supply area could become a demand area if it goes the other way, but at least you want to have the color of what did you draw it that way, right? In this case, if you have it in red, you know that at that precise spot or level, you had on the past a very strong move to the downside. So once that you identify this level, what you have to do when you're looking, when you're drawing a supply area, you look for where, in this case, where the movement starts, and what you're going to do is you're going to look for the first, in this case, since we're doing a supply area, a down move, we're going to look for the last green candle. In this case, this is very simple. This is the last green candle that we had before the big drop here, right? And what you're going to do is you're going to draw a zone from the open to the close of that area, of that candle, sorry, including the wick, and you extend that to your right, right? So in this case, this is a level on April, but we want to have it all the way. I mean, I'm gonna put October, but so now you have your first supply area, right? And then if you can zoom out here, you have it there. Obviously, the price is all the way down here, but we're gonna do it the same way. So now we come here, and then we can spot here another interesting level when we have a very aggressive move in one candle, right? Remember, this is 1 hour. So we had here a consolidation zone, and then we have a big green candle who continue going to this previous supply area. So this is a demand zone. So what do? We look for the first, in this case, if we're going up here, we're gonna look for the first red candle before the big move, in this case, this one, and we're gonna do the same. We're gonna draw it from the open of these candles, and this is a red candle, it opened here and it closed here, right? And then we're gonna draw it, in this case, on green, because it's a demand area, and you're gonna do the same. You're gonna extend it to your right so you can have it in the future available. So now you have there, right? This is a big move here. This is another, not as big as, but it's something that brings your attention, right? So now we have this other level here. One more thing, you can find it all the way down. If you can see, you can find it here. The only thing is the fresher the levels are, the more reliable they're gonna be. In this case, this level is super fresh, and this one is very fresh because hasn't been touched here, right? In I would say that well, I mean, I'm gonna repeat it again. You hasn't seen it here for some period, but you have seen it here. If somehow you go backward here and you look for this level, you're gonna see it that if I try to draw it, this one here, I'm gonna have to do the same. I'm gonna look for the drop here. Where's the drop? The important drop in this area. We might say that the first drop it was like around here, right? So this is from open to close. I'm gonna color it just differently so you can see how it affects in the future. This October. Okay. Now, if you see, it's very close to this one, right? But this one has been breached already. Why? Because the price already, if you see the first time that this was used, it held very well, right? Here. The problem is that since it's been breached many times, it's still a demand and supply area, but it's not as strong as it wouldn't be fresh. Is that what I mean? Okay. But you can go all the way back as much as you can, but just take in consideration always that the fresher that zone is, the most reliable you can be in order to take effect as a support or as a demand or supply area. Okay, so now continuing doing this, we're gonna go to look for our next. In this case, we have here a couple of important levels, and if you see here, I would say probably this one, right? From here we started. So from open to close, and this is in red. More activated. No, we're gonna edit it, and then we go to, let's say, October. We draw it, and then we have it. And as you can see, it came down, rebound, and exactly rejected here. Always you're gonna have this type of wicks. Those wicks, not always, but usually you have this type of wicks, and these wicks are okay because you know that. Remember that we were saying today when we took that long that they were shaking a lot of stops. This is the same thing. This type of wicks, when they reject and leave practically only the wick and not the body, is just because people put usually here the stop losses. So what they do is they check it, take the stops, and then do the movement, right? So you can see and appreciate very nicely the moment. And I'm gonna tell you how to trade them when you're already playing. How do you gonna trade them and take care of it? Because the problem with this type of zone is that you're gonna have to have certain range, because sometimes you have to take it at the beginning of the zone, in the middle. I mean, there's not a specific spot when you're gonna take your position, right? But you have a specific stop, what you have seen before, where is the last level that the wicks did, so you can put your stops above them, so in case they want to shake it, you don't get stopped as the rest, right? So we have another zone here, and if you see, we have another one right here. We have a big move here, so we can, for For example, the movement started here, so from open to close, including the wick. Put it in green. Why? Because it's an up move, so you know that is a demand area. Okay, now you zoom and you want to see how it reacts, right? In order to test it. So if you can see here, we have all the movement, and exactly see here how beautifully work there. In this case, he work here and then he cap up. Sometimes the only way to breach those demand or supply areas is in the overnight. And one more important thing, don't use, if you see, I don't have the overnight session. When you're drawing this type of, unless you're playing Globex, right, in the features and at night, but don't use extended hours. Use only cash sessions. All right, so now I already gave you some example how to do it, but let's do some levels that are close to today's range and see how they reacted. Obviously today's range on the right, but let's see if I was about the price is here, so we're gonna start drawing some levels here so you can understand. Let's start in this area, and obviously you see here the big move here, so open to close, and sometimes the zones are gonna be wider, right? But don't be afraid, it's just the size of the candle, so you have to do from open to close it, and that's the way that you have to draw it. In this case is the open, the way is this open to the let me do it more exactly. Remove, so open here. Why? Because we had a big move to the upside, and the last red candle is this one. So this is the open, this is the close including the wick, and we're gonna extend it to the right. Okay, so we have that one, and let's see what else we can have here that can help us out to see. As you can see, we have here another one to the upside, right? This one. So last candle, open, close, this one is green. It takes time, but you don't have to do it every day, right? So, but it's worth it. I mean, you see how reliable those levels are. Okay, so now we plot some here, and let's take a look of what happened today with these levels, right? Okay, we have this one here. Let me draw one more that looks very obvious. This one, if you can see, right? Very obvious. So open, last green candle to close. It's gonna be red. Okay. So do we have those ones? Yes. So okay. So now we have, I'm gonna zoom in. We have these levels here. Can we do another one? Can we do another one? No, I think about it. We have that one, we have that one. This one is continuation from this one, so if you see, it doesn't have too much. Usually when you have a big drop, in the middle of that drop you have some consolidation to the upside a little bit, and you have the second one. Always happens, right? And let me give you another example. Here, big drop, consolidation a little bit to the upside, and second drop. To the upside does the same. Big drop, a big up, consolidation to the right side, and then the next one. So it's always in the two phases. So and this is when everybody gets freaked out, right? And leave money on the table. And more with, you're taking this and you get freaked out, and then you miss this other movement. Okay, so now we have this, and we go to our 15-minute chart, which is this one, right? I have 1 hour and 15 minutes. Okay, so now we're gonna do, what do you think if we do, we're gonna do a couple of days here, but you can see obviously it's not one day. How do you try? I mean, once you approach to this zone, you know that this zone is a supply area, right? So it's gonna be less likely that you're gonna have a rejection on the first time because it's red, it's supply. But on the other side, you saw here a little bit move, then came out, right, back down, and then you have the next one. So what you're gonna have to do is trade from one zone to another one. So the way to do these trades, and you can combine this with your Fibonacci's and everything, and what the theory says is, you never trade in the middle, or either you wait to take a short here or a long here. You don't trade in the middle, or you take a short, you wait until it gets here to take a short, or you wait here to take a long, right? And that is the best way to take the max of the movements, right? So the idea that you, once you have your in this case, for example, once you have your supply area, in this case, I want to see something that you can take it from the upside, so you can, for example, here, appreciate it better. Obviously this is a big range, right? But you don't trade it here, you go, you wait, and once you're in the zone, you have to look for that precise moment where you're gonna take this short, right? So usually it always breaks the zone, and you have to wait for the next move to see what it does. In this case, we have a low, higher, high, lower low. We didn't have a higher high here, and then we have the next day the gap down, right? So what are you gonna do here in this case is you're gonna look for the previous low, and either you have two options. You take the trade when it breaks this area, or you take the trade here, which is safer. Why? Because you already know that your stops are or here, or you take it when it breaks the zone here. But you can have this type of movements that comes back, but at the end of the day, probably you miss all this movement, but once it broke this previous low, then you have the nice movement all the way down to your target, right? And this one is the same. You have to see what are you gonna do. I mean, at the end of the day, you're gonna look for, if you want to take it here long, you have to wait at least for this area to break, right? never broke out here. Close below, gets into the zone again. Now it breaks, you take it here, rejects, and then to the other zone, right? Okay. Yeah, I'll give you a little bit feedback on that one. Yeah. Let me just, I was just trying to finish here. So that is the way to do it, guys. Obviously, you already have the zones you identify, and then you go to your regular charts and do your Fibonacci's, your support and resistance levels. But now you have, you know that if, for example, you are in this area, it's even though it worked, you're not gonna take a short here, right? Because very likely in this case it's a supply area, but you have to be careful because but it's an area where it can have a rejection. Once it clears it, that's a different story. Or if you're here, you're not gonna take it short here, right? Because you're approaching to this area. You have to wait until it breaks the zone. So it prevents you for doing a very stupid trade where you're practically you want to get short here, you're short in the hole, no? Is that how they say it? Any questions? Let me see your chart. I mean, how can I bring it? I'm gonna bring it here to the.
Oh yeah, I'll have a question if you don't mind. So, when the supply demand zone is like invalidated, like when do you get rid of it? Is it when it's like touch and it's gone, or
When,
uh?
obviously, when it's rich, like this one,
Mhm.
I mean, when it's rich, or when it breaks the pattern, no? In this case, what is the pattern here? You have lower low, yes. I
Mhm.
mean, you have a low, higher high, higher low, and then you don't have the next higher high here. So this one is not gonna work for the upside. It gets invalidated to the upside, right?
Okay.
So you have once the worst thing that you can do is take a trade immediately when you approach to the zone. You have to see how it develops in that area. It's not that I already touched it. I'm gonna take it long here. No, if you can see it, or if you can see another example, for example, let me give you. And we're talking about 15-minute charts here, but I wanna give you a good example here. For example, okay, we arrived to this demand zone, and it touched it. I'm gonna get long. Pues yes, you if you get long here, yeah, you did okay, but you waited 1, 2, 3. So you have to see how it reacts, how it behaves in that area because it's not in a specific level. It's not a support and resistance level. It's a zone. So you have to see how the buyers and the price action behaves here, right? And the way to do it is okay, low, high, higher, low, lower high, higher low again. You have this some reference, you try to take it here, right? Boom. But I miss all that. Okay, so you can take it on the bottom as well. But the idea is that if you gonna, for example, you're gonna take it here. You're gonna take it here is very easy because your stop is 4 ticks below. But the problem is that your stop is 4 ticks below. Your target is gonna be inside, right? Because you always have to aim for 3-to-1 risk reward. And for example, if I'm gonna take it here, I know that my stop is gonna be here, right? Right below this area. And I'm gonna take it right here, right? So if my stop is, I'm gonna take the trade right here, and my stop is gonna be right here, right? And this is a 1. So I know that my target has to be at least 3 times this area, which is more or less this area, right? is 1 to 3 risk reward. You have 1, 2, 3. So you have your target 1 here, target 2 here, and your target 3 here. But you have to give it all this range, right? In order, because it's gonna probably, when it's getting validated, when the zone is breached, right? And it didn't do, in this case, this is a demand zone, and it worked like that one. In this other case, this was a supply zone that got invalidated, right? Because it went to the upside. So once it doesn't break this previous low here,
yeah, see, yeah.
it gets invalidated, right? Because why? You come from here. What it should be done as a supply zone is should reject and come down here, right? But now it did the opposite. It went down. So now this one gets invalidated as a supply area. Now it become more a time of demand area. It had more movements to the upside, right? And we're gonna see it tomorrow. Actually, this one, for example, that was invalidated here. Very likely, if we get to this level tomorrow, we're gonna breach it and we're gonna go up, and we'll see, right? Because it already got invalidated here. Here didn't do what it should be doing. Come down here. It broke. This one also got invalidated. So now let's see how this behaves. Now probably this is gonna be like support area, so demand areas when they're gonna get here. Very likely we're gonna have to see here, and on a break we have to take it here, right? Very likely the break is gonna be here, which is the previous high from today, right? So you also have to make combinations with your other indicators and levels and everything. I don't know if I respond to your question.
Yeah, the feedback. Yeah. You answered the question greatly. Thank you.
You're welcome. Who wanted me to see this one? This is you,
that's
Edgar?
also me. Yeah, that's me.
Okay, you have here. So here the only thing that I would do is, from what I have learned and teach, that your area here, that this is perfect, but you have to, from open to close, that's perfect, yeah. And this one, I don't know what you have this one, but I don't see anything here, unless that it would be from here to here instead of this area, no?
Okay, so it should be like in that really bottom and then
Yeah, because
top of it.
you have a movement to the downside here, right?
Yeah.
What is the last candle? Let me put it in green. What is the last candle?
Let me remove that real quick.
This one, right? This is the last candle, so it's from open to close, and that is here is the area you have to draw. So this one, don't apply all this. It has to be here. Okay?
Yeah, thank you.
That's how you do it. Any other question, muchachos? My dear friends. So I don't know if you more or less understood. You have to practice as well, guys, a lot. But it's fun. I like it. I like how it's. Yeah, you're probably gonna have to watch the beginning, obviously. But it's the way that you do it, right? And they work very nicely. If you can see here, this is a perfect example of how you can. It's only. There are people that only trade on this, and the rule is They don't trade when they wait to take a trade once they get in the zone. Most of the time, the zone works, and you can because the zones also help you out because you can do very well defined uh, stop losses area, right? For example, here, if for some reason I'm gonna take in the future this one to the downside, I know that the stop has to be here. So the thing is, now I just have to determine and see how the price action behaves. If I'm gonna take the next trade when it gets to here, to here, to here, because I'm not gonna wait here. I mean, I actually I'm gonna take it in either of these areas, right? Or on a break on this one. All depends. But it gives you very well defined. So now that you define already your risk, if I'm gonna take it here, and this is gonna be my stop, so I just have to determine once if I'm gonna take it here, I just take this distance, multiply it by 3, and that is gonna be my last target, and I'm gonna get out there. Okay. And that's how you do it. I think that it doesn't have too much science. It has a lot of practice. There is a video on the resources that you can look at it. That is very interesting. Let me look for it, and it's on YouTube. But there are a lot of videos actually. But this is a good one. I like it a lot, and I learn from there. There are many ways. Sometimes people change a little bit but I have seen that this is the best technique to determine the zones. Uh, Obviously, it's a little subjective. Everybody can draw it, but at the end of the day, there are zones. They don't have to be precise, right? Just give you reference of supply and demand areas. Is all that you need. So this is the video. I'm gonna post it here. You have it on the
Hello?
on yes.
All right. Oh my goodness. There it is. Jesus. All right. I'm sorry, man, to interrupt. I know you had asked if we had any questions, but I had a problem with my mic.
No
Hey,
problem.
I wanted to know, when do you normally clear your charts and kind of rechart over like you're doing now, or do you ever? I mean, obviously,
Uh,
but
all depends. Levels, practically the levels, the support and resistance levels, I leave them there. The only thing that I refresh and clear is the trends that I draw. Once the trend is broken, I erase it.
okay.
The trends once the trends are broken, they don't you don't you can leave them sometimes if there are very trends that you draw for in a daily, a weekly. But usually intraday, all the trend. Sometimes I leave it there because I just forget it and because I don't come back to those previous levels. But the support and resistance levels in this case, these high areas, I leave them there all the time because they always. So obviously, if they got invalidated, yes, they're not gonna work, but the price is gonna do anyway something there, even though if they are 1 year old. Because remember, if if the price hasn't visited in weeks, months, that price, you still have longs or short trap there, and because not everybody is an intraday trader, right? You have people who bought stocks or underlines at that level, big funds that are just waiting for those levels to get there back to sell, right? So that is the thing that you also have to understand, that not all the smartest money is not intraday trading. So there's a lot of money on those levels stuck there waiting for a transaction to be done that was not finished in the past, right? So that is what you have to always leave them there. But in case of trends, intraday trends or weekly trends, you can erase it once it gets broken. You don't need it
You got
anymore.
it.
And that's, I don't know if you have other question, guys, but we already got, oh no, actually we're in 45 minutes, but I'm gonna leave it there so to answer some questions if there is any, or if not, I think that that is what I have for today in this web seminar. So you just let me know.
I do. Um, all right. So I noticed that you're using you're charting on TD, right?
Mm-hmm.
All right. So am I. I use TD as well, but you have some different tools than me. So you were right clicking, and then you had like a horizontal line that you was able to use, but I don't see that when I right click. How do I get that on mine?
But you just right click it and they appear here.
Yeah, I got that, but you were clicking like put a horizontal line on there for the yeah right there.
Uh,
Yeah, how do
uh,
you do that?
I don't click the bottoms. I click the scroll on my mouse.
Oh,
So
uh,
I have a scroll on my mouse that also has a click.
all right,
So,
I got that too.
so you
And
go
which
to
one is that horizontal line?
this one, the one with the dollar sign.
Price level.
Yeah, right level.
Oh, man. Look at that, dude. All right.
All right. You always learn something new every day.
Yeah, I was gonna it was a couple of things I was gonna ask you. I mean, I know you were charting, but I just see that you were working on this and I kind of use it too, so I wanted to have you help me out when you had got a moment.
No, no,
But
that's what these web seminars are for. Yeah, there's a
all
lot
right,
of
you see,
small tricks that sometimes you don't see, or you don't know, and that save you a lot of time.
yep, definitely. I appreciate you helping out, man. You see at the top where your studies are?
Yeah,
You got those two arrows, that left and right, where you was able to click through your time
yeah.
frames.
Because
I don't believe I
I have
is that
to.
something you turned on?
Yeah, I have two charts, 1 hour, and I have a here. I put two charts.
Oh,
Because you have on the left you have 15 minutes, uh, and on the right 1 hour. I go right click, I extend it. I have the 1 hour here, or I switch it to the 15 minute.
nice. So I got two charts now. I didn't know that, but
Yeah,
I don't have those arrows. How did you get those arrows up there to flip
arrows.
between time
Again, you
frames?
have your two. When you expand
Uh-huh.
it to one, they're gonna appear by themselves, so you can move around.
Okay, yeah, no, I don't have that.
It's like when you have, for example, this. I mean, you have a watch list.
Yeah, I do.
You have a watch list here. You can extend this one, for example. I'm gonna expand this one specific one to max, right? And now I have here the arrows, and I can go to the 6 that I have there. But
Max.
I have this,
Oh, there it is.
yeah.
Ha. All right.
And so how do you go in detail to it?
Well, let's
Anything
flip
else,
the
guys?
charts.
Yeah, you
Let's
flip
not flip
charts. Anything else, my friends? Nope. Okay, so we're gonna wrap it out, and I thank you for your time, and see you tomorrow.
All right. See you tomorrow, brother.
Adios.
Thank you.
You're
Take care.
welcome.